Good day, I am Michael Tebogosibicho, accounting teacher from St. Bernard. The subject that I am going to present to you today is accounting grade 12, and the topic will be inventory, valuations and validations. All right, are we ready? Let's go. This is a very easy topic, and it's one of the topics where you can score good marks when you have your exam coming now on the 28th of October, grade 12. Let's look into it. Inventory, valuations and validations is a topic, as I said. Now let's look at the following. The sole aim of any entrepreneur is mainly to make a profit. Therefore, in a trading business, you buy stock with an aim to make a profit. Therefore, inventory is what you're going to sell. These are the goods that are bought so that they can be sold at a profit. All right. Now, for us to record our inventory, there are systems that we need to use in order to do our recording. We have inventory systems. These are methods of recording the trading stock in our ledger accounts. Now let's look at the first inventory system. We have the periodic inventory system. Periodic mainly means period, which comes from the word, which comes from the English word period, a particular time. Therefore, periodic inventory system implies that stock taking happens at a certain period, preferably at the end of the financial year. Now, this is the cheapest stock system. However, it makes it difficult to track stock theft, trading stock deficit, as stock is only calculated at the end of the financial year. So, one item that we can take note of here. The periodic inventory system is cheap. It's a cheap stock system. However, it makes it difficult to track stock theft and trading stock deficit. It's not easy to determine that, as stock is only calculated at the end of the financial year. All right. Now, other inventory system, we have the perpetual inventory system. The perpetual inventory system is also now a word derived from the word perpetual, which means continuous. Now here, stock taking happens continuously, and cost of sales is calculated and recorded at the point of sales. So every time a sale taken place, cost of sales will be updated. The cost of sales account will be updated. This system is expensive. Okay? But it is better for control of inventory, for internal control of inventory. It makes it easy for the business to detect stock theft. So it's easy to detect stock theft. Right. Now, main important ideas here is we have the periodic inventory system, and then we have the perpetual inventory system. Now, periodic is derived from the word period, which means here we do stock taking at the end of a certain period. Whereas under perpetual is derived from the word perpetual, which means continuously. Stock taking happens frequently, it happens continuously. It happens continuously. Right. The periodic inventory system, it is cheap. Right. It's just cheap stock system. However, it makes it difficult to track stock theft, as well as you cannot determine your trading stock deficit easily. Whereas under perpetual, it is an expensive system. However, one can use it for better internal control of inventory. Why? Because it is easy for the business to detect stock theft at any given moment. Now let's look at some differences between the two. The difference between perpetual and periodic inventory system. In a periodic inventory system, purchases are recorded in the purchases account and the cost of sales is done by implication in the trading stock account. Very, very important to take note of that one. So, under the periodic inventory system, purchases are recorded in which account? In a purchases account. And what happens to the cost of sales? Cost of sales is done by an implication in a trading account. Right. Now, in a perpetual inventory system, purchases are recorded at cost price in the inventory account. Now here we get now an inventory account, whereas under periodic we had a purchases account. So under perpetual inventory system, when we buy stock, we will record it at a cost price and in the inventory account. And a cost of sales account is kept during the financial period. Whereas under the periodic inventory system, there was no separate cost of sales account. It is rather done by an implication in the trading account. Now, in the perpetual inventory system, you have a separate cost of sales account which you kept during the financial year or during the financial period. I hope this will come handy for you to know the difference between the perpetual and the periodic inventory system is very, very important. And also to know that we have two types of inventory systems, which is the perpetual inventory system and the periodic inventory system. Now let's continue. Let's look at an exercise extracted from past papers to look at the following first. Before we can do that exercise, let's look at the following first. It is also important to take note that whenever we do these inventory systems, we can take note that under both these systems, under both of them, which is the periodic or the perpetual inventory system, gross profit is always the same when using either the perpetual or the periodic inventory system. So your gross profit will be the same under both. It doesn't matter whether you use periodic or the perpetual inventory system, the gross profit will be in the ultimate end be the same. Right. Now those were your inventory systems. Now let's look at valuation methods. Methods of valuing your stock or determining the value of your stock. We have two methods, which is your FIFO, and FIFO has an acronym which stands for first in and first out. According to this method, the inventory purchased first will be sold first. So whatever that I bought first in will be sold first. Mostly in the exam papers, they like to ask, briefly explain what does the following stand for, FIFO. Then you simply say the acronym stands for first in, first out. However, according to this method, the inventory purchased first will be sold first. Then there's another method. The second method is the weighted average method. Inventory costs are valued as the average unit cost between the assets or the inventory in the beginning and the newly acquired asset. It further implies that every time you purchase stock, you must determine the new price. So under weighted average method, every time new stock is bought, you determine a new price for that stock. Then we have, for this year, we have the third valuation method. This one is now the specific, let me just get paper up, the specific identification method. This is the simplest, it is easy. Why? Because form of stock valuation where each item is assigned a specific cost. Where each item is assigned a specific cost. Just as its name says, specific identification. The cost price of each item of stock is recorded in a register, or we say a stock sheet or a catalog when the item is bought. So one will clearly see what the item cost us, because you'll obtain the cost of that particular item from the register or from the stock sheet or from the catalog. So this one is it's very simple because it's a form of stock valuation where each item is assigned a specific cost. So each item will be assigned a specific cost. Right. Now these three valuation methods, it's what we have to value our closing stock. We have the FIFO, which is the first in, first out. And then we have our weighted average method, whereby when each and every time new stock is bought, you need to determine or calculate a new price. Then we have our specific identification method, whereby each item will be given a specific cost. A specific cost will be assigned to it. Those are definitions and explanations of the methods of valuing our stock or determining the value of our closing stock. All right. Right. Now, let's look at the following. It's an extract from a previous paper based on valuation of our stock, our inventory. Very important to take note, we have 29 marks for it, which takes about 15 minutes. So in the exam or so, you'll have to try and work within that, the parameters of that given time frame in order for you to finish in time. Now let's look at it. They say you are provided with a stock sheet of Aquatic Pleasure Mechanics Limited, suppliers and distributors of Concorde Flyer RX speedboats for the year ended 28 February 2014. The business uses the perpetual inventory system. Very, very important to take note of that. The business uses the perpetual inventory system and specific identification method of valuing stock. Okay? Now, all stock is bought on credit and all sales are for cash. So the first exercise here will be based on the specific identification method. All right. Now all stock is bought on credit and all sales are for cash. So we do not sell on credit. Now let's look at the information given to us. The information given to us here, we have the date when the stocks were purchased and then we also have the number of boats that we've purchased for each and every month. Then the cost per boat, like specific identification method says, each and every item will be assigned a specific cost price. Now the total cost price for the 10 boats is 250,000, and then the sales, we sold 7 at 37,500. Then this was the opening stock on the 1st of March 2013, 10 boats. This is the cost per boat, the total that the 10 boats costed us. Meaning we had 10 boats at a cost price of 25,000, and then in the ultimate end it's 250,000. Now how did they arrive to that? It is simple. Your 10 multiply by 25,000, sorry, then they got 250,000. Meaning to work to your total cost price, you take your unit and then you multiply it, unit, multiply it with your cost per unit. Right? So you take your unit, multiply it with your cost per unit, then in the ultimate end you'll have your total cost. That is how they arrive to all these. Right. Then on the 30th of April 2013, we have 16 boats, 32,000 each. And then there's the total cost. July 15, there's the cost per boat. That's the total cost. This is the number we've sold at a price of 55,500 each for one. Then 15 November 2013, we have 18 boats, bought them at a cost price of 41,000. Then the total cost is 738,000. We sold 8 at 61,500. So for one, it's 61,500. Then the 5th of January 2014, we also had bought 11. Each one costed us 46,000 rand. Then the total cost is 506,000 rand. How did we come to the total cost? Again, we took the unit, then we times it with the cost price per unit. Then the ultimate, we got our total cost. Right. So this is the information with regard to our stock. And remember which method is in use here. The method that is in use is our specific identification method of valuing stock. Okay. Now what is required from us? What is required from us? The first one, they say, calculate the total value of sales amount for the year. Now remember, on our information, when we look at our information, we only had our sales per unit there, and then at its selling price per unit, there, and over there, and over there, as well as there. So when we look at our opening, which is the 1st of March 2013, we had 10 boats. Out of these boats, we sold 7 at a price of 37,500. Now the examiner wants us to calculate the total value of sales amount for the year. Okay. Right. So where we're going to concentrate on will be, we'll have to look how many units we sold, as well as how many did we had then from there we can discover that 7 was sold from 10. Now this 7 had a selling price of 37,500 each. So for us to get a total, we need to multiply these two and get our total sales value for those units. Right. Let me just get my papers in order here. Right. Now we calculate the total value of sales amount for the year. We start. We sold how many there? On the 1st of March we sold 7. So we say 7. Just get a marker. We'll say 7 at a price of, we had 37,500 each. So there will be at 37,500 equal. Then we had 30 April, we sold 10 at a price of 48,000. So we sold 10 at a selling price of 48,000. Then again, on the 20th of July, we sold 11 at a price of 55,500. So 11 at a price of 55,500 equal. Then we also, on the 15th of November, we sold 8 at a price of 61,500. We sold 8 at 61,500. Right. Then we have on the last day, 5th of January, we sold 4 at 69,000. So 4 at a selling price of 69,000 equal. Right. Now once we do the calculation of all these items here, then this should definitely give us the total sales. Everything together should give us the total sales. Right. Let me just get my calculator so that we can do it. Right. So first we take 7, multiply by the 37,000, let me just, 37,500, it equal 262,500. This is now the total sales value of the 7 items which I've sold from the number of boats that I had at the beginning of March 2013. It amounted to a total value of 262,500. Next, 10. The next one is, we say now that 10 multiplied by 48,000 it will give you 480,000. So there's your 480,000 for the 10 units that I've sold, the 10 boats that I sold at 48,000 rand. The next one, 11 multiplied by 55,500, it gives us a 610,500. Then we had the 8 boats that we've sold. 8 multiplied by 61,500, it gives us a total value of 492,000. 492,000. Then the last one, we sold 4 at a selling price of 69,000 rand, which gives us a total sales value of 276,000. Right. Now all these together should give me the total sales value of all the boats that I've sold. Let's add the totals now. We will start with this one and then come with the 480,000. We take the 262,500 plus 480,000 plus 610,500 plus 492,000 plus 276,000. So in total, our sales value for all the boats that we've sold amount to 2,121,000. 2,121,000. That is how we will calculate the sales value for all the boats that we've sold. Remember, the examiner only wanted us to calculate the total value of sales amount for the year. The total value of the sales amount for the year. Right. That is where we took the units that we've sold, and then we've multiplied each unit that we've sold with its selling price to get the total value or sales value of the 7 boats that we've sold. There we had sold 10, multiplied it with its unit selling price to get the total value, and then in the ultimate end, when we go down, all the units that we have sold amounts to 2,121,000. I believe you all got this one clear, but immediately after the break or so, if you have questions, you can just post them. I will be answering them immediately when I come from the break. Right. Now the next question asks us to do the following. Calculate the value of closing stock on the 28th of February. Now here we need to calculate the value of closing stock. Okay. Now we go back to our information again. Now remember, closing stock means the stock that is left after we've sold, the ones that we still have in our store. Now from our information, when we look at our information, On the 1st of March 2013, we started off having stock of a value of 10 units. But from this stock, we sold 7. So as a result, how many units are left? We will have to say 10 minus 7, then it means we are left with 3 units. We are left with 3 units. From which batch? From the batch that I had at the beginning. I had 10, I sold 7. How many is left? The difference between the two, what I had minus the sold, gives me, I'm left with 3 units. Now what was the cost price of these 3 units? Easy, specific. Specific identification is in use. These boats cost me, or cost the business, 25,000 each. So it means the 3 that is left will be assigned this value, the 25,000. So I have 3 at a value of 25,000 rand. Right? Okay, we are done with the first batch. Now let's look at 30th of April. We had 16 units. Now from the 16 units, we sold 10. So as a result, how many stock do we have on hand? What is our closing stock in units? We will have to say 16 minus the 10. What is left? Automatically we'll be left with 6. Now the 6 that I have on hand, what is the cost price of this 6? Which method is in use? Specific identification. So I go to the batch which I bought in April. It's 16. What cost was assigned to the 16 for each unit? 32,000 rand. So as a result, whatever is left from these batches will be assigned the very same cost price, 32,000 rand. So 6 at a cost price of 32,000 rand. Right. Next, we look again. Next batch is the 20th. We have 15 units that we've bought, but we sold 11. So 15 minus the 11, how much is left? How much of that do we have as closing stock? We have 4. At a value of, again, the 15 had a cost price for each 37,000 rand. So the very same price will be assigned for what is left. So 37,000 rand. There. Back to our information again. The 15th of November, we have 18 units that we had bought, and then we sold 8. So the difference between the two will show us how much is left. So from that, the difference is 10. 18 minus 8, so 10 is left. What will the cost price be? The cost price, again, we assign the value which it costed us to buy the 18. So 41,000 rand, that is what we will assign these 10 that are left at. So it's 41,000 rand. Okay. Then we have the 5th of January, 11 that we've bought. We sold 4. And then the difference between the two will tell us how many units are on hand. The units that are on hand, it gives us 7 units. At what is the unit price? the unit price, we take it from this 46,000. So there it will be a 46,000 rand at. Okay. All right. So again, the specific identification method of valuing stock is in use. The examiner wants us to calculate the value of closing stock on 28 February 2014, meaning we need now to calculate the value of closing stock at the end of the 28th of February using the specific identification method. Now, how do we go about with this? We take what we had minus sold, then we will have the units that are on hand or the closing stock of the first batch. Again here, 16 minus the 10, then it gives us the units that will be on hand for the second batch. We'll also say 15 minus 11, we then also have the units that will be on hand for the third batch. 18 minus 8 will give us the units that will be on hand for the fourth batch. And then the last batch, 11 minus 4, will give us also the number that will be on hand for the last batch. Now, to assign the cost price per boat or for the boats that are on hand, you will take them from the batches which you have sold. Right. The first batch we had left with 3. The second one we left with 6, then 4, then 10, and then the last batch we were left with 7. So now let's look at how much the value of the closing stock will be then by using our calculators. It will then now be 3 multiplied by 25,000. It gives us a 75,000. So this one here we have a 75,000. Then the 6 multiplied by 32,000, it gives us 192,000. Then the other one, 4 multiplied by 37,000, gives us 148,000. And then 10 multiplied by 41,000, it gives us a 410,000. Then 7 multiplied by 46,000, it gives us 322,000. Then now in the ultimate end, we will have to add all this together to give us the value of closing stock, because the question wanted us to calculate value of closing stock. So when we add everything up here, we will be having our value of closing stock. Now again, we check how many units did we sell. It is your 3 plus 6 plus 4 plus 10 plus 7, which gives us a 30. 6 plus 4 is 10, plus 10 it's 20, 7 plus 3 is 10, plus the 20 gives us 30. So we've sold 30 units. Then the total value of closing stock, the total value of closing stock, the stock that we have on hand, is 30. Now we add So we did not sell these units here. These units here are the units that we did not sell. They are still on hand. They are still in our possession, or in our shelves, or in our store. So we have these units that we did not sell. Now what is the value of them? We'll have to add all this together to give us the total value of the closing stock. The first one was 75,000 plus 192,000 plus 148,000 plus 410,000 plus 322,000. Then it gives us a total closing stock value of 1,147,000 rand. So that will be now the value of our closing stock. We have 30 units of those boats on hand or as closing stock. The total value is 1,147,000. But each boat has its specific cost price, which it is assigned to the particular boats, right? But to get the total value of the three, you multiply that with the cost price, then you have the total value of the three boats that we still have on hand. But now all these total values gives us the value of closing stock on hand at the end of 28 February 2014. I can just put it there again on the screen for you to look at how did we arrive at the total values of closing stock. How did we arrive to that one? Right. I believe we can move to the next question, because we had how many questions here? We had 3.1, we've done it, the calculation of the sales amount. 3.2, we've just done it now, the value of closing stock. And now we move to 3.3, whereby now we are asked to do the following. Calculate the cost of sales for the year. The cost of sales for the year. Now, which method of valuing stock is in use? We are still using the specific identification method, right? And then which system is in use? The perpetual inventory system is in use, meaning when we do the perpetual inventory system, you know, is a continuous recording here. This will now be 3 point. We have about 10 minutes to go for break, so let's quickly do the calculate the cost of sales for the year. Right. Right, the cost of sales for the year, we will start by saying opening stock. How much was our opening stock? We had opening stock of 250,000. So it was 250,000, right? And then we need to add our purchases. So plus purchases. Now the purchases, how do we get the purchases? For the purchases, we will add all these items that we've bought from 30 April until 5th of January 2014. All these items, when we add them together, they will give us the purchases. So the purchases will amount to 2,311,000. 2,311,000. Again, how did we get it? We said 512,000 plus 555,000 plus 738,000 plus 506,000. All these together gave us 2,311,000. Right. Now all these two together will give us how many goods or how much is the value of goods that we have available. It's 2,561,000 rand. When we add all these two together, the 250,000 and 2,311,000 gives us that value which we call goods available. Okay, right? Goods available for sale. Now in the end we need now to subtract now our closing stock. We will subtract our closing stock. The closing stock, remember we've determined the closing stock here at 3.2. The value was 1,147,000. That very same figure, we transfer it in here now. 1,147,000. So if we take now the 250,000 and we add it with our purchases of 2,311,000, then we get that goods available. Then we subtract our closing stock of 1,147,000. Then we end up getting our cost of sales. Our cost of sales as 1,414,000. 1,414,000 is now our cost of sales. Right. Then the very important to take note is our purchases. Whenever we calculate purchases, we will look at the number of units that we've bought during the year. Also important to check for any other costs that have contributed to the availability of goods in our store. Here we talk about our railage, custom duties, all those costs which made the availability of the goods possible in our store. We will add them. To make up the purchases account as well. For example, here we only had purchases of these units. If there was railage or custom duties or carriage, we could have said, okay, purchases plus carriage or purchases, and then under it comes railage or freight inward, which will add to the value of the goods that we have in our stores. Also very important to take note is whenever we have our purchases and units were returned from what we've bought, we'll have to subtract them from our purchases. We'll have to subtract our returns from the purchases should such a kind of item appear, whereby here they will say return of units, returns. Those returns, we will subtract them here from our purchases. Right, okay. Then the next question is calculate the gross profit for the year. Calculate the gross profit for the year. Now it's important to know the formula first to calculate gross profit. Now to calculate your gross profit, you know the formula is here. Now you need to take your sales, right? And how much is your sales? If you still recall from the first question, we've calculated the sales value. It amounted to 2,121,000. Now that value, we slot it in there, 2,121,000. Then we need to subtract our cost of sales. Now the cost of sales, remember, we've calculated it there on top. We've calculated it as 1,414,000. We put it in brackets to show that we are subtracting. Then we only have 5 minutes to go, and then our answer is the difference between the two. It will amount to, we'll say, 2,121,000 minus 1,414,000. Then our answer there is 707,000. That will now be our gross profit. Okay, that's now our gross profit. The next question is, calculate the markup percentage for the year. Again, here you also need to know your formula, your markup percentage formula. Here you have your gross profit, over cost of sales multiplied by 100 over 1. Now let's look. Do we have our gross profit? Yes, there is it there. So we say 707,000, which was the gross profit, divided by our cost of sales was calculated there on top, 1,414,000. So cost of sales 1,414,000 times 100 over 1 will give us our answer. So there we go. It's 707,000 divided by 1,414,000 equal, then times 100, then it means our markup percentage is 50%. That has brought us to the end of our specific identification, valuation of inventory question that we've extracted from a past paper. This is one of the simplest valuation method. I believe when it comes in the exam, you will never go wrong with it. And once you see it in the exam, and you will be well equipped to answer it, because specific identification method is you get your item that is bought will be assigned its specific cost. Thank you very much. I see you after the break. Take some water and come back refreshed. Welcome back, Matrix. I hope you had an awesome short break. Thank you for the questions that came through and some advices also that came through. Let me first respond on the first one that I got here about the question paper or the extract that I got here in front of me. Most of the schools which do not have it, it will be loaded on the OneDrive online resource. That is where you can download it from or get it from or get hold of it. It's on the OneDrive online resource. Also, you can email your subject advisors by asking them to send you a revision material resource pack. In that particular pack, you will also find this question in there. Then I want to respond to the other question which one of the learners asked. It is based on 3.3. It is based on 3.3. Calculate the cost of sales for the year. The learner here asked if there was stock missing, will it have an implication on this calculation here? Most definitely, yes, it will have an implication on this calculation here in calculating the cost of sales for the year. Then the calculation will be as follows. Let me just show. Let me just give you the formula then. If there was missing items or stolen items, then you need to calculate the cost of sales. You will still start with your, I'm referring to that 3.3. You will still start with your opening. There's a formula that you follow, your opening stock. And then from the opening stock, you will add your purchases, right? And all other costs that made the availability of goods in your stores possible, which you will add here under things like carriage, release, as I said. And then the next item will be to subtract your, in this case we had boats, you will say minus the boats stolen, all right? And then next you'll have your subtract your closing stock. You'll have your closing stock there, right? In the ultimate end, your cost of sales here, your cost of sales will therefore then be different than the one we have there. The cost of sales will be different than the one that we've got there. So missing items or stolen items will affect the cost of sales calculation, right? Then I refer to the next question. Let me just get my calculator away there, right? So the question was, will the missing items have an implication on the question here, or the question of 3.3? Yes, you'll just subtract those boats that are stolen and then subtract your closing stock. Then in the ultimate end, you have your cost of sales there. Then you'll have your cost of sales there. On this one, where there was no stolen items, this is what we'll have: opening plus our purchases minus the closing stock, and then we have cost of sales. All right. Once there is missing items, we will say our opening plus the purchases, then we subtract the stolen items minus closing stock, then we have cost of sales. I hope I have assisted in this with this regard. Then the other one is with regard to specific identification method of valuing your stock. This is an important item or subtopic that all matriculants need to know, because I got from the question that most of the other learners did not do it or they don't know it. It is an examinable item. You need to practice it and revise on it for the exams. It is a CAPS requirement. Then we look at the other question was based on the calculation of closing stock. The calculation of closing stock. The calculation of closing stock. Let me just get a hold of my calculations. Two learners posed the question that they got lost with the number of units that were on hand, the boats that were not sold, the 30. How did I get it? And as well as they did not arrive at the very same answer as I did here. All right, remember, here the question is about value of closing stock. Right, now how did I arrive at these values? Number one, we go back to our information. Let me just get hold of my information paper. We need to look at our information. Right, there is it. Remember, this is our information sheet that we have in terms of the boats that we have bought. Now, to determine the value, of the closing stock, this is what we've done. We said, okay, the 1st of March we have opening of 10 units, but how many were sold? 7. So 10 minus 7 gives us how many units? 3. There's the 3 I got there. And then, what was the cost price of the boats? 25,000. Then it is the 3 multiplied by the 25,000, it gives us 75,000. All right? The 3 multiplied by the 25,000 gives us the 75,000. All right? Now the same, you go down with it again. You said you have 16 units minus how many did we sell? We sold 10. So how many will be left? 6. And then 6 units left. What was the cost price of each? It's 32,000. Then 32,000 multiplied by that. 32,000 multiplied by the 6 units gives us that figure of 192,000. This is how you go down with it. Then I have 4 there, and 10 units left there, and 7. And then in the end, I added all this up together to get this total of 1,147,000 for the closing stock. All right. So again, you say your 10 units minus your 7, you get 3 that is on hand of the opening stock. What was the cost price per boat? 25,000. So you do each one of them like that. Subtract the 2, multiply with that cost price, subtract the 2, multiply with that cost price, subtract the 2, the difference, multiply with that cost price, subtract the 2, the difference, multiply with that cost price. That is how I arrived at these values there. All right. Right. I will leave it here so that they can just again see how did I arrive at those closing stock figures. All right. I believe I've assisted you in the questions that you've posted through. Again, the first one about the questions that I have here prepared, or the resources that I have here prepared. Again, you can download them or get them on the OneDrive online resource. Also, you can email the subject advisors to email the educator. Here in particular, I'm talking to educators who are around. You can just email the subject advisor to get a revision resource pack or revision resource material pack, which you can download also these particular questions from. And then let us just look at the next question that is posed. Let's look at 3.2. The question is why we are here at 3.2 again. One of the learners is asking, why can't we add all the costs of per unit on 3.2 after we have add units? Right. It is advisable to do them separately like this in order for you not to forfeit part marks, because once you add everything up and you just make a addition mistake or so, then the whole calculation will be wrong. So it is advisable to write them separately in order for you not to lose marks in your calculation. Should you just say the 30 multiplied by this whole units here, so this whole total value of units there to get that one, you might get it wrong due to errors that one can make here with the cost prices. Okay. Then another question from a learner is, does specific identification occurs only at perpetual inventory system? Remember, we have two inventory systems. We have inventory system, we have perpetual inventory system and the periodic inventory system. Okay. It does not matter which system we use, in the ultimate end we will end up having the same gross profit. Now, perpetual inventory system, you can have the specific identification, you can have the weighted average, you can have the FIFO. It doesn't matter. It depends from business to business which system they are preferring to use. I believe I've also assisted you in the particular question. Right. Now, do more activities on them, then I tell you that you will do very well in this particular question, because it is straightforward and easy. It is simple to do the specific identification valuation method. All right. Now we move to the next one. Remember, we have the specific identification method, and now we move to the other two. We have FIFO and we also have the weighted average method. So with the next exercise that I have here, we will now also do a bit of revision on those two. I know that most of the learners, you know this one very, very well. So we will be going quickly through it. And then also the questions, I will answer them as they come in. Now let's look at the following valuation methods again. Inventory valuation and fixed assets. All right. Again, the questions that I have here, we will upload them on the OneDrive online resource. There is where you can get hold of them. Now let's look at the following question. It's also an extract. Inventory valuation, it's a 26 marks. So if you score this 26 marks in the exam, it's a bargain. You will really do well if you already have the 26 out of 300, right? Now here we have cycle traders. They sell one type of bicycles to major retail stores around South Africa. They make use of the FIFO method. They make use of the FIFO method. So the method that is in use is the FIFO method of valuing their stock, and uses which method, which system? They use now here the periodic system. They use the periodic system. All right, the periodic system. The business is owned by Billy Martin. Okay, so which method of valuing stock is FIFO method, and which system is in use? The periodic inventory system. All right, now here, what is required from us? The examiner wants us now to, to tell or explain what do the letters 50 stands for. All right, remember this comes straight from just get my answer sheet ready. All right, I believe everyone can see it clearly. The question was, what does the letters 50 stands for? Remember at the beginning of my presentation, I already defined these various valuation methods. The first one that I started with was the 50 method. I said the 50 stands for, the letters are standing for first in, first out. That is the first in, first out method. Okay, the 50, it stands for first in, first out. All right. And secondly, you can go on by explaining and saying, right, according to this method, items bought first, items first, right? Then you earn your 2 marks there. So this is what 50 stands for. I believe this is a definition that is close to your hearts. Many metrics, you know this very, very well. If you work through past papers thoroughly, you'll see this question keeps on coming up or appearing. Right? Then 5.1.2, now here the question is, calculate the value per bicycle on hand on the 1st of July 2013. Now here we need to look at our information. Let's look at our information. The information that we have here is at the bottom. All right, we have our information there at the bottom. Wrong page. Right, this one is clearer. Let me just. Right, there's the information with regard to the bicycles, information on stock, bicycles on hand on the 1st of July 2013. We have 60 bicycles on hand, meaning we start off this month, July, with 60 bicycles. Now, value per bicycle, question mark, we don't know it, but we have the total value of those bicycles, which is 240,000. So what was the question now again? Let's look at the question. The question was calculate the value per bicycle on hand on the 1st of July 2013. Now that one, this is how we go about doing it. The number of bicycles that we have are 60, but we don't know the value per bicycle. It gives us a total value of 240,000. Now you and I know, in order to arrive at this total value, we have multiplied the 60 with something in order to get 240. So when we work to the total value, we multiply it. Right? Now for us to work back to the unit value, or the value per bicycle or value per unit, you will have to divide. All right? Now let us apply that. Okay? The question was, calculate the value per bicycle on hand as 1st July 2013. Now we go to our information. Bicycles on hand 1st July 2013. How many do I have? 60. But what is the total value? Is 240,000. Now remember, when we worked towards the 240, we multiplied. So now we want to work back and get this figure here. We will divide. How? You will now take your 240,000. You will now take your 240,000 right, and then you will divide it by 60. The 60 units that were on hand. Then your answer will therefore be, you take 240,000 divide by 60, then the value per bicycle is 4,000 rand. That will be your answer for 5.1.2. Calculate the value per bicycle on hand when? On the 1st of July 2013. So we go to our information, we look for bicycles on hand, which date? 1st of July 2013. We had 60, but we don't know what's the value for each of them. But we know what is the total value for all the 60. All right, so 240 divided by the 60 will give us the value per bicycle. All right, now we move to the next question. Our next question is, calculate the value of closing stock on 30th of June 2014, 30th of June 2014 according to the FIFO method as well as the weighted average method. All right, but let's start first with the FIFO method. Okay, right. Right, what we're going to do now, I don't know whether it's clear, but I believe you can see it. All right, this is the information that we have. We're going to use this information to do what? To calculate the value of the closing stock on 30 June 2014 using which method? The FIFO method. Okay. Right. Number one, let's first look at what does the definition of FIFO tells us. It says FIFO stands for first in, first out, meaning items bought first are sold first. All right, let's look at our information. FIFO, first in, first out. It means the items that I have bought first will be sold first. They will be sold first. Then we can make a conclusion that says the items that were bought last will never be sold first. Then as a result, they will still be on my shelves or they will still be in our possession. Right. Now immediately when I come across this question, this is what I normally advise learners to do. Right. You look at your stock card, you have your opening units. This is the total units purchased or bicycles bought during the year. How were they bought? September we bought 250, January 200, and then May 180. All this together gives us the 630 units bought for the whole year. Right? And then the 60 year is what we had coming from the previous month. Okay, so altogether we'll have the 60 and the 630, which gives us now 690. This is the stock that we have. All right, now here they say bicycles returned from January purchases. 5 bicycles were returned there from this batch of January. So there by the 205 were returned due to various reasons. It could be we were not satisfied with the particular items that we bought. Right. Bicycles sold during the year, it's 450, so we sold 450. And then bicycles on hand, we have an on hand of 235,000. Now check. This is the units that we have on hand. And we don't know how much each unit cost, and we also don't know what the total value of that units are, or of these units are. And this is what we need to calculate, the value of closing stock on hand when 30 June. So we need to calculate the value of the 235 units, right? Normally what I do, I start writing that 235. I say 235 is the units that I have on hand. Then I draw my line. Okay. Now I need to look for units that will make up that total. And which method must I keep on applying? The first in, first out method. Alright. Now this method tells me that units bought first will be sold first. So as a result, the units that were bought last will still be in my store, or will be on my shelves or in my storeroom. Right. Now let us look at our purchases. Immediately I go there to my end batch, the batch that I bought last. I go to it. This batch here, the 180, will never be sold first. As a result, I will use them in my calculation of getting the value of closing stock. So I'll say 180,000. Sorry, 180. The 180 units. 180 units there. At a value of how much? 4,200. So times 4,200. How much is it? It gives us there 756,000. Okay, what did I do? I started off writing the units that are on hand. There are they. And then I drew my line. And then I said, okay, units that were bought last will never be sold first. As a result, they will be part of my closing stock. They will be part of this batch. Then I go to the bottom. I take this whole units. They will still be on my, they will never be sold first. They're still in my store, right? Then the value per bicycle is 4,200, and that is the total value of the 180, right? Next, what do I do next? Next, I go to my calculator. Then I say 235 is the units that are on hand. Already I have 180 that is forming part of it. So how much do I still short to make a 235? I still short 55. So I need another 55 units. Now, where do I go now? I go to my information and go up. I'm done with this line. I go now up. Can I take 55 from a 200? Yes, I can take the 55 as it is from the 200. So there I'll write 55 units at a price of how much? At a price of 4,500. At a value of 4,500 equal. Right. So now I say 55 multiplied by 4,500 equal, it gives me 247,500. Okay, right. Now let's check. 180 180 plus 55 equal, does it give me the 235? Yes. So as a result, these units give me the units that I have on hand. So what is the total value? the total value be? I'll have to add the two values here. I will say now 756,000 plus 247,500 gives us 1,03,500. That is now the value of closing stock. Again, what did I do? I started with the number that I have on hand, and then I draw my line. Now I tell myself I'm going to determine the units that will make up the 235. I go to my information. The last batch bought will always be part of the closing stock because of first in, first out, meaning they are not bought first, they will never go out first, they are still part of my closing stock. So I took that 180 as it is, I slotted in there, this is what I got, and then I said 180 minus 235, how much do I still short to make up 235? I short 55. Can I take the 55 as it is from the 200? Yes. Then 55 multiplied by 4,500, I got that value of 247,500. Now, I'm not done yet. Now, these two units gives me 235,000, which is the units that are on hand. Now, what is the value? To get the value, I will have to add now these two figures in order to get the total value of closing stock on the 30th of June 2014. Okay, right. Now we move to weighted average. Weighted average. Now normally with the weighted average, we still also now need to calculate the value of closing stock using the weighted average method. Now with the weighted average method, I normally make use of a formula. The formula that I use is I take my opening stock, then I plus my purchases, okay, I plus my purchases, okay, then I subtract my closing units, okay, I subtract the closing units value, okay, then I divide it by, right, so minus closing value, then I will divide it by the units that I have all together. All right, this is the formula that I use. My opening stock plus the purchases minus the closing value divided by the units that I have in total. Now let's go to our information and apply the formula. All right, weighted average method. This is our information. Right, number one, we said we will use our opening stock. But here, it's the values, right? The total values, not the units. So let's go. At the beginning of our opening stock, 1st July, we have 60 units. But what are we looking for? We are looking for the total value. How much is it? 240,000. I put my 240,000 on top. Okay, 240,000 on top. All right, so 240,000 plus, we said we will add our purchases. Our purchases is what we've bought during the year, 630. Then the total value of that 630 is 2,606,000. I will add it. It's 2,606,000. Okay. Next step will be to subtract the closing value. There now minus, right? Wait a minute, I've just made a mistake here. It's not closing value by my formula, it's my returns. Sorry for this one. It's returns, sorry. Returns. My returns value. Sorry for that one. Let's repeat it again just. It's opening stock plus purchases minus returns value. Okay? Right? So we have our opening stock is 240,000 plus 2,606,000 minus the return value. Okay? We returned how many? 5 units. What is the value? 22,500. So there's a 22,500. Okay? Divide. Okay? We divide it now by the units. How many units do we have? Opening we had 60. So for that we had 60. Okay? Plus purchases we have 630. So 630 there. Right? Returns minus returns, we have 5 units that we've returned, 5. Okay? In the ultimate end, we'll have to solve the top part first. Take our calculators, then we say 240,000 plus 2,606,000 and then minus the returns are 22,500. It's 240,000 plus 2,606,000 and then minus 22,500. Right, wait a minute. 2,606,000. There's something I wrote at height. Let me just add again. It's 2,440,123. 240,000 plus 2,606,123 minus 22,500. It equal, there you go. It is now 2,823,500. Okay, then divided by the units. How many units do I have? It is your 60 plus your 630 minus your 5. You should have 685. Let's just double check it. It is now your 60 units plus 630 minus 5, then you have 685. Okay, now let's divide. So it's 2,823,500 divide by 685. It gives us an average of 4,121 rand. We can make it a 90 cent. This is now the average price for each unit. Now, how many units do I have on hand? I have 235 units. Remember from our information, we have 235 units. Now what we do, we multiply that with 235 units to get the value of our closing stock. We multiply that with 235 to get the value of our closing stock. So multiply by, let me just clear and start it all over, 4,121 rand and 90 cents multiply by 235. Then what we get here, it's 9,686, and then we have 46.50. Okay, this is what we have, 968,646, 968,646 rand 50 cents. This is what we have as our value of closing stock using the weighted average method. Okay, then now we still have some other questions here. The other question is 5.1.4. Calculate the gross profit on 30 June 2014. The gross profit on 30 June 2014. Right. Remember, for the gross profit, we need to know the formula. The formula for gross profit, we need to know the formula for gross profit, which is again sales minus cost of sales. Sales minus cost of sales. Then we'll have our answer. As gross profit. Okay? Right. Once you have the formula, then it is easy to calculate your gross profit. Okay. Now we check. Back to our information. We check now again. Okay. This is our opening stock that we have. We purchased 630. These are the values. That is our returns that we have, and this is the units that we've sold. So bicycle that we've sold is 450. All right. So let's start with what our formula said. The formula said is sales minus cost of sales. So let's start with our sales. Right. Our sales, we have sales. I'm going to use from a bigger page. We have sales amounted to, according to our information here, our sales amounts to 3,037,500. So we write 3,037,500. That was our sales. Then next, we need to get cost of sales. We need to subtract it from the cost of sales. We need to subtract it from the sales. Now, in order for us to determine the cost of sales, we will start with our opening stock. All right? Opening stock. How much was the value of our opening stock? When we look at our information, the value of opening stock is 240,000. So there we will write 240,000. Okay, and then next we add purchases. Okay, but what's important is with the purchases, it is always important to, be aware of deducting the returns. How much was our purchases in total? According to the information, we have 2,606,000. So we will write 2,606,000 there, right? Subtracting the returns. How much is the returns? It's 22,000. So 22,500 is what we will subtract. As a result, when you do the calculation, we must end up having, let's check, it's 2,606,000 minus 22,500. Then the answer is 2,583,500. Okay. Now next, then we will have to subtract our closing stock. Now to subtract the closing stock, we need to check which method is in use. If we use the FIFO method, then we need to take the closing stock that we've calculated under FIFO, which we got as 1,03,500, to subtract it as our closing stock. If we use the weighted average method, then we need to use this value, which is the 968,646.50 as our closing stock. Now let's use the FIFO. So FIFO will say 1,03,500 as our closing stock. In the ultimate end, okay, in our ultimate end, 240,000 plus 2,583,500 minus 1,03,500 will give us our cost of sales of 1,820,000. Then the difference between the two, will give us our gross. It will give us our gross profit. It will give us our gross profit. When we subtract these two, it will give us our gross profit of 1,217,500. That is our gross profit under FIFO method. Thank you very much. This is where we stop at the calculation of our gross profit using the FIFO method. We have only about 2 minutes for a few questions that we can handle. Okay, a question that I got here is, does it happen that we are not given the total value of bicycles on hand? Meaning, if we are not given this total value of bicycles on hand, as per information here, yes. If we do not have it here, the 240,000, then we should be given the value per bicycles. Then we will say 60 times that value per bicycle, then we get our total value of bicycles. Thank you very much. This is where we end our session. Matrix, prepare in time. Inventory valuation methods is one of the easiest topics that will help you to score good marks in the exams. From my side is good luck with your exams.